All right, everyone. This is a traded review for April 14th, Thursday. So on Thursday, I traded a Twitter. Twitter has some news, and it was Elon Musk offers to buy Twitter for 43 billion. Okay, so if you look at the price, it was $54.20. And you see here, there's a 420 here. So Elon Musk is putting the 20 cents just to make it up for the 420 number. That reminds me of a few years ago, he is planning to take Tesla to private for $420. We all know that it didn't happen. So when I read the news, I didn't think he is taking it seriously. So my overall bias is to short the stock. Okay, so that's my reading on the news. And then I pull out the chart. So this is what happens on Friday. Thursday, let's pretend we don't know what happened when the market opens. So during pre-market, we can see that when the news break out, it just spent 1 minute. The 1 minute bar just immediately reached 53.99. So it quickly reacts to this tweet, and the price is almost at the level he is making the offer. But after that, it quickly came down, and then it dropped below VWAP. So my reading on the technical side is also the stock is probably going to sell off. It's going to sell off because it already did so in the pre-market. So my overall plan is actually to trade it to the downside. Okay, now let's switch to what actually happened on that day. So I recorded my screen. So let me show you. So this is a trade recording from my laptop, from my desktop. And I'm going to play it at fast forward so that it doesn't waste too much of your time. So let's start. As you can see, and then let me pause that. So because it had a huge gap up, so I'm expecting it to have some profit taking at the open. So seeing a red bar, I think that makes sense, but I'm not going to short on the first bar because I think it's just going down for the profit taking, but we don't know what's going to happen after profit taking. Are there more buyers coming in on the same day, or there'll be more sellers coming in on the same day? I want to see that 1 minute open range breakout or breakdown for me to make a move. Okay, so let's see. Definitely there's a lot of profit taking, and there's a huge volume, 3 million shares. And now the second bar, you can see the second bar is trying to break out. So I'm putting a buy stop. Okay, so let me go back a little bit. So I'm trying to put a buy stop that if the stock goes above 48.5, I will enter the trade. But to be honest, that's not a very good setup because you can see the VWAP is at 49. So I'm risking 50 cents for potentially 50 cents gain. That's 1-to-1 risk reward ratio. So that's not very good. So actually I shouldn't put it here because I was just seeing the stock is going to go up. So I'm trying to place a open range breakup trade. But now looking back, I shouldn't do that. So luckily it didn't happen. So the second minute didn't break out, and the third minute is going to the downside. So now at this point, I quickly switch my order. I put another order at the low of the day as a 1 minute open range breakdown. So I'm basically putting a sell stop at the bottom and a buy stop at the top. So either way it break out, I will take a trade, follow that direction. And then you can see it just quickly flushed down. I don't know my fill price. I probably get a bad fill because it flushed too quickly and I was using market order. And they can see it quickly reached the 1 hour. So now I'm in the trade And it has a kind of weak pullback because now it already closed outside of the 1 minute open range. And now I plan to take a profit at the low of the day, which I think it's not, but now I take profit too early because there's a lot of room to go to a downside. The stock is doing very weak. Now I already took profit twice and now it reached 2R and I'm trying to take some more profit. Okay, and now I think I have some positions left, but it's not a lot anyway. And I hit 2R already, and I put a like a trading stop, and yeah, I actually stopped here. So that is a trade. But if you look at what happened for that day, it actually went down a lot. But it did curl back once it hit 2R, did not reach 3R, it actually curled back. So it could be another trade that as it curls back to the 1 minute open range, so that's basically my entry level when I short it. I can re-short it on the same level and it goes down. And this is really because SPY was really weak on Friday. So that is why the overall market, everything just follow. So SPY goes down by a lot. So that's why shorting any stock is following the overall market trend. But yeah, Twitter actually has some, Twitter, so basically completed gap fill. So it filled the gap completely. I could be like holding some positions for here, but it curled back to challenge my entry price. So I usually take a quick trade in the morning. So I don't want to be in the trade for too long. So that's basically it. The reading on the stock is, I don't think that offer from Elon Musk is serious, and the pre-market is selling off. And on the technical side, we are trading the 1 minute open range breakdown, and they give us 2R risk reward. Not 3R yet. You have to hold it much longer to get that completed back gap fill. But I think overall, it's a pretty easy trade to manage. Yeah, so that's it for today. Have a good day. Bye.